I'm Greg Harmon, founder and president of DragonFly Capital Management. DragonFly Capital is a couple of things. It's a manager of separate accounts for high net worth customers. In that separate account group, we run both very long-term positions, short-term trading positions, and overnight trades. The other part of DragonFly Capital is a newsletter for those people that want to trade their own accounts. And for that newsletter, I provide Friday afternoons a broad-based market analysis, followed by 10 trade ideas that come out on a Sunday afternoon, all with triggers, stops, and adjustment methodologies using both stocks and options to allow the do-it-yourselfer to trade their own portfolio. And then the final piece is during the earnings season, I provide 2 ideas every day on stocks that are going to be reporting their earnings either that night or the following morning before the open. These use exclusively options trades to mitigate risk and to provide optimal leverage to be able to take advantage of increased implied volatility in the markets around earnings. So you can see, as Charles Dow explained, some 140 years ago, the market moves in trends, and we follow both that primary trend, the long-term trend, as well as that secondary trend for the short-term trading opportunities, and then the day-to-day fluctuations. Today, I wanted to focus on showing you 5 charts of big name companies that will be reporting their earnings either tonight or tomorrow afternoon, and how they're setting up coming into these reports. First one I have for you is Apple. Apple Computer, you can see, has had a tremendous run from June last year up to its peak in February. And then with a gap down, went through its 50-day moving average right here in the middle of February, came down, bounced, and then made an ultimate low in March, towards the end of March. Since the end of March, it has been trending higher. So in the guise of that secondary trend, we've had a reversal to a trend lower and then a bounce back to a trend higher. What's interesting about this stock is the way that it bottomed with this hammer candle, part of a Morningstar reversal. And a Morningstar reversal, you may recall, it doesn't tell you how much further the price of the stock is going to go, but it tells you that it's reversed. What we've seen since then, though, is a move up to a very important area. This area here, I've drawn in some Fibonacci retracements to look at where we've gone since the stock bottomed. And the stock has paused now at a 61.8% retracement of the total drop. And oddly enough, or maybe not so oddly, this is also the same place where the 200-day moving average or the 100-day moving average is right now. So there's a lot going on right here with this stock going into the earnings report. These are positives. Going up, retracing 61%. That's a good positive. A small pullback and back at the 61%. These charts are all as of the close yesterday. Coming into the report tomorrow afternoon, it's now sitting a little bit above this 61.8% retracement, but it's got some negative aspects to it as well. If we were to draw a line here from the peak of the momentum of the RSI, the peak of the RSI here in January, through to the top here, we see that momentum is diverging to the downside. And we're seeing the possibility of the same thing happening in the MACD here at the bottom. So we've got a positive trend, consolidation building at the 100-day moving average and a 61.8% retracement with momentum diverging to the downside. How does this set up for us going into the report for tomorrow? This is a stock that's ripe for a move. And we don't know what direction the move's going to be. But this is what makes this stock attractive. This energy building at key levels. So we'll take a look at the options market after this. and see what kind of options trades we can put around this to take advantage of any kind of move that would come out of catalysts from the earnings call. One thing that we don't expect is that it'll stay right around that 280, 285 level. The second chart is Facebook. And we can see a very similar pattern here, right? We had a run up, a slight pullback, and then a deep dive from February through to March. Since that deep dive, the stock has also retraced a little over 61.8% of the dive. It's just below and touched the 200-day and 100-day moving averages. And as of yesterday, was pulling back. We have that same momentum divergence building here, where we've got the peak in January and a lower peak here in April. We don't necessarily have it yet in the MACD though. The MACD still, even though it's turned sideways here, we have to assume that it's still in the uptrend until it starts to turn lower. So this chart is actually looking a little more positive than Apple moving into the earnings event. Facebook reports tonight. So we'll get clear guidance from them and clear guidance from the market as to the interpretation of their view very quickly. The third chart is even a little bit better. Here we have Microsoft. Microsoft, same issue, same thing. February dropped to a March low and has retraced over 80% before it pulled back. The key here for Microsoft that makes it an even better looking chart to me than Apple or Facebook is that the pullback from this peak again held at the 61.8% retracement. Here, the 100-day moving average didn't stop it. The 50-day moving average didn't stop it. And it's continuing to hold over this 61.8% retracement. We do have the same momentum divergence, so it does bring a bit of caution here. But this is probably the most positive of the three that we've looked at so far. This momentum divergence down below, with a potential cross down in the MACD today even, could lead to a further retracement to the downside though. So we'll be looking at both upside and downside trades in Microsoft. Another popular name, Tesla. Tesla has the same pattern here. Pull back, retrace, goes up over 61%, bounces back there, and now is retesting this gap high. We have the same pattern here, slightly lower divergence in the momentum, but on the MACD, we've got the MACD still rising. This is a very positive looking chart, and we'll be focusing on the upside in Tesla. Then the final chart is Amazon. Amazon, different than the others in that its drop from February to March was completely retraced, and then it popped another 50% higher from the gap down. So we had 150% retracement of the gap. What's happened since then? We had a lower high in the RSI. We had a higher high in the MACD. So we've got positive momentum in the MACD, and we've got a slight negative divergence in the RSI. With this chart and the movement lower, plus we've got a move back up today, we're seeing a lot of consolidation, and that consolidation gives us pause for any further upside. So we'll be focusing on downside trades in Amazon. And those are the 5 stocks that I'm watching. Thanks for watching.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.